Alrighty, folks, welcome back to another episode of your favorite podcast, Untangling Climate Finance. As you undoubtedly know by now, I'm Jay Tipton from Gordian Strategies. So we are deep into season 4 now. August. It's literally August. I feel like around August of every year, I have this exact same realization that the year is flying by. So always blows me away. Anyways, today we're turning to a question that a lot of people in the market ask, but few can actually answer with hard numbers. And that is, what shape is the voluntary carbon market really in? To get into that, I'm joined today by Anton Root, who's the co-founder and head of research at AlliedOffsets. Anton and his team have built one of the most complete pictures of the carbon market that's out there. They track projects across nearly 40 registries, and they follow the entire cycle from early project investment through credit issuance all the way to credit retirement. Most people in the VCM only see one little slice of the market. A developer, for example, sees their projects and maybe some competing projects. A rating agency sees quality. A broker sees a few deals. Anton sees the entire board, and he's got the data to see what's actually happening versus what the headlines are telling us. Because the press releases don't tell the whole story, of course. Prices are quietly climbing again, the integrity push is starting to show up in the numbers, and underneath it all sits a problem that the market largely stopped talking about, which is that roughly 1.6 billion tons of credits have already been issued but never retired, which is about 8 years of demand literally just sitting there. So, in this conversation, Anton and I get into where credit prices are heading, whether the move to higher integrity credits is real, how the CDR shakeout is playing out, and where Anton sees the strongest headwinds and tailwinds in the market, including one region of the world that just low-key became the biggest source of credit demand. But all right, let's get into it with Anton. Hey, Anton, welcome to the show. How you doing today, man?
Hey. Thanks for having me. All good. How are you?
Very well. I appreciate it. And where in the world are you calling in from?
I'm actually currently in the Pyrenees in the south of France. So not a bad place in the world to be for sure.
Definitely not. Is that where you're normally based, or is this just holiday?
No, just holiday. And so I'm here for about a week, but thought, I'd jump on here with you and have a chat about carbon markets.
Well, I appreciate it, taking the call from the Pyrenees. I live in Spain, and I'm probably 4 hours south of the Pyrenees. So very jealous because I know up there the temperature is a little bit more modest. But anyways, let's talk about your career path. So everybody knows you are the co-founder and head of research at AlliedOffsets. Well, why don't you take us back before AlliedOffsets? Where and what did you study?
So I studied journalism and Middle Eastern studies at New York University. And then I moved to London and studied economics there at a school called the School of Oriental and African Studies, SOAS. And part of my journalism degree in undergrad was actually looking at media criticism. So not actually sort of broadcast journalism, but more about the internet and how we use the internet to sort of ingest information and other things like that.
Very cool. Interesting educational background.
Thanks. Yeah. It was, quite a random way into the carbon market, I'd say. But I think a lot of folks in this market, do something completely different and then find themselves in it.
Without a doubt, I think 95% of the people that I've spoken with shifted into carbon markets after one or maybe even two careers in something entirely different, but maybe carbon market adjacent. So anyways, yes, you were spot on. But why don't you give us your career path from graduation to now in carbon markets?
Yeah, so when I left NYU, I started working in the crowdfunding space. So this was back when, Kickstarter was just becoming a thing. They were having multi-million-dollar campaigns for, board games and things like that. And I think it actually kind of has some interesting potential parallels with the VCM. But yes, I did that for a little bit. I worked as a journalist, so I was actually ran a podcast about crowdfunding. Talked to a lot of folks, wrote about what was happening in the industry, both from regulatory point of view, but also just what was happening in the market. And then when I moved to London, I started working with my co-founder. He had a company at the time called Allied Crowds. So we were looking at crowdfunding, but specifically in emerging markets. And then I guess around the time of the pandemic, we were thinking about pivoting. And that's when we started looking at carbon markets. And that's how Allied Offsets got started.
Fascinating. And I would like to have another episode just about the crowdfunding, because to me, that's such an interesting field. And I think that you know better than me, it continues to grow and expand into what it's actually funding. But let's keep the focus on carbon markets. So give the listeners a sense of what Allied Offsets does.
Yeah, so when we started, again, this was around the sort of end of 2020, early 2021. The carbon markets were starting to have, a little bit more momentum or picking up some momentum. And we were hearing from some of our clients back from the crowdfunding days, like people were thinking about, well, I've got this project, it's a plot of land maybe, like I don't really know what to do with it. What are some potential things that, I could fund? And we were, we came across the carbon markets, and we thought, okay, well, there seems to be actually quite a lot of information out there, but no one's done the work to put it all into one place, right? So the initial question was, when you fly somewhere and you check that tick box that's like, offset your flight's emissions, like where does that money go? Who put that project in front of you? Is what you're paying the right price? All of that, all of those questions we had ourselves. And we went out and thought, okay, well, we have some, background with data. We know how to, manage a bunch of information. And we started pulling in data from 5 of the main registries. So ACR, CAR, Gold Standard, Vera, and CDM. And initially, it was essentially just aggregating the data so you can see, if you're looking at projects in Kenya, for example, like what is there on CDM, what's there in Gold Standard, and we just brought you that information first in one place. And then at that time, people were really, I think, wondering two things. So first one was, how good are these credits? Obviously, even back then, there were a lot of conversations around, what is the quality of these projects? So that was question one. Question two was, okay, well, now that I've chosen a project or some credits, like what should I pay for them? And because we didn't come into this space from a deep, background in carbon markets or climate science or anything like that, we didn't think we were the right people to answer the quality question. And this was also around the same time that, folks like Silvera and B0 came up. So we thought, okay, there are people who are experts looking at that. But the pricing question was interesting to us. And because we, started to build relationships with brokers and other intermediaries, online marketplaces, we thought, okay, well, we think we can come up with some pretty decent estimates for what the credits should be worth. And that was sort of our first sort of value additive product, I would say. So the aggregation piece was helpful, but I don't think anyone was really sort of becoming clients of ours for just, pulling in data from various registries. What they were coming to us for is this sort of, the much more in-depth analysis that we were doing on pricing. And then we expand that into buyers. And now, of course, we cover a whole range of markets, compliance, voluntary. We pull data from almost 40 registries now. So if you're someone who cares about, a tiny registry somewhere in a place like Egypt, for example, we'll have projects from there, not just the main ones. And we do a whole bunch of analysis on top of that, forecasting, everything like that. So yeah, if you need data on the carbon markets, we're certainly the place to go for it.
Yeah, Allied Offsets has it. And as you said, you track the entire cycle. So that could include project investment through to carbon credit issuance and then eventually credit retirement. So what does that capture kind of in practice that a standard or registry or rating agency on its own doesn't capture?
Yeah, good question. So, I mean, a lot of the sort of foundation of the data comes from the registries, right? The sort of the description of the project, its location, the transactions, so the issuances and the retirements. That all comes from the registries. The sort of layer on top is the pricing, the sort of the market movements around who is buying credits, or where are those buyers coming from, what sectors, and then of course, no single registry can have a view on what everyone else is doing or what the other registries are doing. So we obviously provide that data as well. And regarding the ratings, I mean, we partner with all the major ratings firms, B0, Calyx, Silvera. We have agreements where we provide their ratings to our clients as well. Sometimes it's sort of a light version of the rating. Sometimes it's the full one. And I'd say, we again those companies don't tend to go too much on the pricing and the sort of the market piece. I would say they're more laser focused on the projects they rated, and of course they have the data on the additionality and their analysis on that and leakage of permanence, et cetera. But again, not necessarily the who's buying the credits or how much, what is which credits are being used for compliance purposes, which ones are being used just as a net zero claim. So that type of information we have, and I think really nobody else has.
Well, that's fantastic. And it lends us to the ability to talk about market trends because truly you're seeing the entire cycle from your perspective, which, as you alluded to, or as you said, certain actors see one part here, another part there, but they're not really capturing all of it from beginning to middle to end. And so, for anybody listening, obviously paying attention to carbon markets knows that for the last 2-3 years, the hot topic has been about integrity. And that includes ICBCM, the work they're doing, BCMI, the work they're doing, carbon credit ratings agencies, all the ones you just listed. And that's really been the dominating kind of direction of the last few years. So from where you sit on the data, and looking at all of that, is the market actually moving towards higher integrity, or are people just better at talking about the stuff that they're doing to make it with higher integrity?
Yeah, I think that's a good question, and I think I should say it would have been really easy for market participants to, when the sort of the Gordian articles came out, and a bunch of different studies came out calling credit quality into question. I think it would have been really easy for market participants to just sort of bury their heads in the sand and, ignore the accusations. But of course, anyone who's been to a carbon conference in the last 2-3 years, they know that this is, quality and trust in the market has been at the very top of the agenda for all of the parties involved. So the developers, the VVBs, the sort of marketplaces, everyone really has been laser focused on quality. And, I think that is having a real impact on the market. And I do think, it's a lot easier for people to understand which credits are, more well, again, we're not a quality company, so I don't want to say too much on of my own opinion because I'm not really an expert on the quality piece, but I think certainly we're seeing a move towards credits that are much easier to verify that the ton that they're claiming is being avoided or being removed, that's actually happening. So in terms of the sort of the numbers, so we're looking at, you mentioned ICBCM there. So they issue these core carbon principle labels. Just in this first half of 2026, we've already seen 18 million tons of CCP-tagged credits issued, and that's almost the same number of tons for all of 2024 and 2025. We saw just over 20 million in those 2 years. So I think the market is starting to respond and it's starting to supply higher quality credits, or at least CCP tag credits. And then we've also seen a big spike in the retirements as well. So the credits that buyers are demanding, that's, the CCP tag ones saw a big spike last year. We're on track to see, that sort of be sustained in this year. So it wasn't just a one year blip. And, I think really the the longer term sort of way to seeing more quality in the market is the new methodologies that the standards are currently reviewing and releasing. But typically there's a bit of a lag between, when a methodology gets a new version of a methodology gets approved to, any existing projects will have a bit of time to transition to that methodology. But because those methodologies are so much more stringent in terms of the baseline figures you can use, or the sort of the default variables that are available to project developers, we are going to see fewer issuances from projects that that would have issued whatever 10,000 tons in a year previously, may now be issuing 5,000 tons, and that's going to, I think, greatly reduce the risk of overcrediting and ultimately lead to much higher quality credits in the market. So I think that's certainly a move in the right direction, and yeah, we hope that folks on the demand side will look at that and sort of start to see that the market is moving and is providing higher quality.
That's very encouraging. You probably know this, and I was just reading it. Well, I've been reading it kind of the last couple months. Kind of to your demand part of that is, it seems to be that is actually happening because a lot of buyers are basically filtering out anything that doesn't have a high rating from one of the ratings agencies. And then the other big filter is it a CCP eligible or a CCP labeled standard / methodology. So I think we are starting to see that from the demand side, that that offtake and that retirement is increasingly becoming associated with higher ratings and ICBCM's CCP labels. So, but you're right. I mean, it's very good to point out the fact that there will be a lag, obviously, as projects take time to develop and for them to issue credits and then, go through the entire cycle. So that's a very obvious but good point that I wasn't even thinking about when you started explaining. So it's good to keep in mind. And then I think the other thing is, the trend that you said about 2024 and 2025 and that amount equaling basically what we've seen in 2026, that's also super encouraging. So hope to see that continue. The other big market trend, definitely the last 12, 18 months, has been carbon dioxide removal credits, CDR. And I understand that that's been a pretty big focus for Allied Offsets. So you guys have the biochar price index. You're looking at hundreds of CDR projects and pricing pathways out to 2025. What is the data telling you about how fast the CDR side of the market is maturing?
Yeah, I think maturing is a good way to put it. When we started tracking this market, or this part of the market back in 2023, we saw just over 1,000 companies that were developers, projects that were removing removing carbon dioxide and then selling credits as so not just sort of carbon capture, but actually selling credits on the back of their activities. And 1,000 companies in a market that's very new, completely untested, is kind of a lot. And where we stand today, I was looking at numbers. There have been only just over 800 buyers of engineered removals credits to date, all time, right? So you can't really have a market where you have more sellers than buyers, and we're starting to see a little bit of consolidation. We're starting to see companies unable to raise following on funding, and unfortunately starting to see some companies going out of the market because they're not able to to get the offtakes and get the buyers that they need. So I think there was a lot of hype a couple of years ago when there was when a lot of these companies raised money and started to announce these big projects that they were launching, but the demand hasn't really kept up. I mean, case in point, the Microsoft announcement earlier this year. So I think the companies that are doing well in CDR, they've got multiple off takers, they've got the investment already baked in for a couple of years, and they're sort of able to weather the storm. And I think certainly when you look at long term trends, they're looking at things like the EU ETS and the proposals there to incorporate CDR credits into the ETS. Those are kind of very positive signals longer term, but I think the next couple of years are going to be tough for those who are, maybe don't have that offtake baked in, or who are struggling to raise money. And but the companies that have sold the credits or pre-sold the credits, and the companies that are in the position where they're building the plants and building the facilities, they're doing, I'd say, generally well. We're hearing some projects are seeing delays. Some projects are maybe realizing that they pre-sold the credits at a too low price to make things. I think for the most part, those that have been able to get the offtakes are generally working on, how do we deliver those credits that we promised to deliver. Those that don't have the offtakes, I think, are in a little bit of a trickier position right now.
Yeah, that makes sense. And consolidation and unfortunately exiting of market is just the normal cycle of any market, right? You're always going to have people at the beginning that want to hop on the opportunity. Capital flows in and ideas start to get generated, which is great. But then obviously over time, things change. So it's just, you look at any other sector, any other market, it's very common there. But of course, unfortunate to see, because of course what we're working on is taking carbon out of the air, and that's obviously super important for the world. But hopefully, we'll see a lot more stability in the next year or two. So, how about market trends on pricing and retirements specifically? Are there any trends in numbers over the last year or 2 years that would surprise people who actually follow the market closely?
Yeah, I think one that I'm constantly surprised by really is just that the price of credits, actually has been going up pretty steadily over the last year and a half. So obviously, when we started in the market, it was around 2021, early 2021. That saw a big sort of growth in demand and just awareness of carbon markets, and with that came also a rise in prices. And then throughout 2023, we saw prices drop, as the quality concerns started to impact demand. And yeah, so prices went from about $5-6 a ton on average back in 2022 to about $3 a ton in 2024, started 2024. But since then, they've picked back up, and they're almost, at on average about $7 a ton now. And I think that's obviously not, you look at different prices in the market, like there is no one price for carbon credits, right? Like if you look at renewable energy credits, those go for a lot less than afforestation credits. But if you take the sort of weighted average price that people are paying across the market for the credits they're buying, that number has gone up, and yeah, it's essentially doubled in the last couple of years. I think that reflects, I think we're the credits that were kind of called out in the media and had questions raised, those were primarily the avoidance credits. So things like Red Plus, cook stoves, renewable energy credits. And those have generally stayed low. I think part of the reason why the price average has been increasing is that buyers are more willing to pay, $10 or more for things like afforestation, improved forest management, those types of projects where they trust those a little bit more. There haven't been as many scandals around them, and yeah, so we're seeing kind of the price that people are willing to pay that used to be centered around a couple of bucks a ton. Now we're seeing a much wider range of prices that people are willing to pay, or buyers are willing to pay for these credits. But so yeah, so we've seen that number go up, and as that number's gone up, we've seen sort of the value of the market come back and make some gains over the last few years relative to where it was the previous couple of years.
Well, that should be music to the ears of everybody listening.
Let's hope so. Yes.
Yeah, no more of a race to the bottom for $1, $2, $3 junk credits that was dominating for a long time. So obviously a lot of reasons behind that, but that's good to hear. That is very good to hear. And Anton, let's talk market headwinds and tailwinds. We could split the board. Why don't you start with headwinds? What's something holding the market back right now that you're seeing in the data rather than what I'm reading in the headlines?
Yeah, so I mean, look, the fundamental issue at the moment is demand, right? But I think that's an easy answer that you probably will have been reading about in the headlines. I think one that's a little bit less apparent. What we're seeing in the data is the oversupply of credits, right? So there was a little bit of a conversation about this a few years ago, but I think since then people have generally stopped talking about it. But to me, it still presents, a pretty fundamental market issue, which is that just the number of credits that we're putting into the market. It's if you exclude CDM and those sort of historical credits, the market is issuing about 400 million tons a year, out of which only about 200 million are being retired. Right, so every year we're continuing to pump more credits into the market, more credits that are being used up or that are that buyers are willing to pay for, and that's something that's, of course, going to keep prices down because obviously, the more supply you have, the less competition and the buyers have really very little incentive to pay more. And the other issue is that, we are sitting on about 1.6 billion tons of carbon that have been issued but not retired, right? So, and that number is growing by about 200 million a year, but the 1.6 million that's already about 8 years worth of demand, but at today's levels, that at some point needs to get cleared. Right now, some of that, of course, is not all of these credits are going to be kind of interesting to people. Some of these are really old credits. Some of these are from projects that may have gone under at this point. But still, even if you look at half of those credits, like sort of being generally available to buyers, that's still a very large sum that needs to be cleared. And I think some of the market sort of initiatives like ICBCM and CCPs, if you look at you say, okay, well, at some point buyers are going to discard anything that's not CCP tagged. That's going to make a big dent in that oversupply. But still, I think it's a conversation that needs to continue to be had. And I think that's something that we've kind of stopped talking about at some point for some reason as a market.
Yeah, I wish we had more time to just dig into that because I feel like, again, that could be a episode and a full conversation all on its own. Those are huge numbers. Like you said, even if you cut it in half, which who knows if half is the appropriate slice, but even if you cut it in 3/4, that's still massive, or 2/4, whatever. Anyways, how about tailwinds? Where do you see some positive tailwinds?
Yes, I mean, compliance is one that, again, we've probably been reading in the headlines, but it is quite exciting to think about that the fact that there is, all of these countries are creating, systems to account for and track and sort of trade and keep an eye on like what's happening with emissions globally. So that just kind of being on the sidelines of that whole Article 6 infrastructure being set up at the moment is I think quite exciting. I know it's a very data nerdy thing to say, but yes. But the sort of non-headline answer I would say is Asia. We're seeing a lot of new companies entering the market on the demand side from Asia. So it's now, I think last year it was that Asian companies were overtook European companies as the sort of the biggest source of new demand for credits. So I think that's quite exciting. And primarily, I think these companies are where, the sort of American and European companies were several years ago, where they're starting with, dipping their toes in the market, maybe not looking to spend too much and therefore buying credits that are fairly inexpensive. And I think the hope is that, once you can get them involved with the market, you can kind of increase their knowledge and then get them to pay a little bit more and pay for more sort of more expensive credits where maybe the environmental integrity is a little bit easier to highlight. But also, that's it's not just those kind of cheaper credits. You're also seeing companies like Tencent entering the market and making big pledges and committing to really high quality permanent engineered solutions, renewables credits as well. So yeah, so I think across the board, that's certainly an area and well, a geographical area where the market can look to for some positivity.
Yeah, strong tailwinds, very strong tailwinds. The Asia point in particular is very fascinating and good to know. I mean, obviously, hopefully, listeners who are on the supply side are considering that as they look to their commercialization efforts and which direction they're heading. Because I'd imagine the Asian buyers aren't only looking at Asian supply, it's probably supply in South America, South Africa, Europe, et cetera. So very good to know. So why don't you now look into your Allied Offsets crystal ball and let's look to the future. Correct me if I'm wrong here, but I believe your forecasting has the VCM reaching something around 27 billion by 2035. What kind of confidence, Anton, do you have that a number like that is like achievable, and what might be the factors that move it either up or down?
Yeah, good question. So, I mean, we have various scenarios that we model. So, I'd certainly say that that's one of the numbers that we've put out there. But it really depends on what you think the market will do. And of course, we have various projections based on low demand growth, high demand growth, medium demand growth, et cetera. But I think in terms of what the overall direction of the market is, like if you look at retirements, it's about 200 million tons a year, right? When you compare that to over 50 billion tons of global emissions, 200 million is really just a drop in the bucket. Like it's absolutely nothing. So I think and when you start to think about these compliance programs that are coming online, and starting to look at incorporating voluntary credits as well, I think certainly the long term direction of travel is very positive, and I think that 27 figure, I can certainly, we certainly have estimates that or scenarios where that number can be a lot higher. But yeah, absolutely, I think there's, as the VCM and the compliance markets kind of become more intertwined, it's kind of harder to classify what is going to be pure sort of VCM projected number versus the overall carbon market. But yeah, I think 2027 is definitely doable. I think we can quibble about numbers and go through the assumptions. But yeah, I think the long term projections are the long term trajectory is very positive. And how we get there, I think, is the big question.
Yeah, absolutely. But again, good to hear. It definitely seems that there's a lot of factors that are starting to help move that direction for year on year growth with a lot of the stuff that you listed, mainly the compliance and the growing voluntary, and then obviously all of the not yet running, but we're getting there with like increased demand and some of the big players kind of pushing things forward. But I like to hear that. I definitely like to hear that for all the market actors. So let's zoom in a little bit away from the larger market and into Allied Offsets ambitions. As the data continues to get richer, Allied Offsets starts to look less like a database and much more like market infrastructure. And I'm curious, is that your ambition to become a reference layer for the whole market, to become a reference layer that the whole market runs on? Or what is the ambition?
Yeah, good question. I mean, like I don't know if we're going to be sort of providing market infrastructure in terms of obviously things like transaction support or anything like that. That's not what we do. But certainly, we want everyone to be looking at our data. Of course, ideally as clients and customers of ours, but we also put out a lot of sort of free reports and tools and data into the market. So yeah, our ambition is to try to make this market a little bit less opaque and help people in the market to understand what's going on and to help them make better decisions. I think obviously, I'm sure every one of your guests at the moment is talking about AI, and I'll say something as well. We especially as a data company, we're seeing a lot of course, interesting use cases, but also interesting opportunities presented by AI. We're doing quite a lot on that front. We launched an MCP for a subset of our data, and we're building fuller version of the MCP for our whole data set. So you can start to, plug that into your Claude or ChatGPT and, start to interface with our data in that way. So yeah, I think, this is a really exciting time, well, to be a tech entrepreneur and to have a tech startup. And it's, I think our ambition is to try to be as helpful as we can and to facilitate as much good data as we can to as many people as possible.
Well, you were definitely doing that. And I personally can vouch for it because I read your reports and go to the webinars and things like this. So you're certainly doing a great job of helping all market actors. And I hope that more market actors from every single side continue to come to you guys and hire you for your services, because it truly is pretty amazing what you guys are doing over there.
Yeah, I think, I think one thing that everyone in the carbon markets is guilty of is being in an echo chamber, right? It's hard to know like how relevant this space is to those outside of the carbon markets. So I'd love to just be able to understand like are there projects out there that could be eligible for carbon finance, or could set up a carbon project but either aren't thinking about it or haven't heard about it, or why isn't that happening? Just because it feels like the carbon markets hasn't had a sort of runaway success story, right? Like nobody's looking at an industry and says like this industry was able to stand up because carbon markets helped pave the way and helped to finance this, right? And I think there's still a lot of innovating and kind of changing that the VCM needs to do in order to get to that runaway success story. I think maybe the closest thing at the moment is something like biochar, right? Like we're seeing a lot of biochar companies come up and start to make biochar, and a big part of that is so that they can kind of sell the credits more so than the biochar itself. But that's a pretty small sector in the grand scheme of things, and I'd love for there to be a broader conversation, or how do we think about getting the VCM or carbon finance more broadly into just a whole lot more rooms, a whole lot more conversations, because it's a great tool. The theory is very sound. I think in practice, we're still waiting for the sort of the perfect implementation of how this market could work. And until then, I'd just love to be able to engage with and talk to and reach out to and kind of have something to show, have data to show for those that are not part of the market, but could be and probably should be.
Yeah, it's a great goal. And you're absolutely right. Again, kind of going back to what you said earlier in terms of just the amount of capital when we're talking about what carbon markets and their associated projects are actually doing for the world. It would be nice to see, 10x or 100x amount of that money flowing to where it needs to, as uh, as all of the benefits that these projects deliver, both planet and people. So I'm with you on that one. But let's see what happens. And I do think that continual conversations, whether they're structured at climate weeks or just off the cuff kind of conversations with other market actors or thought leaders, it all helps. It all helps. So, all right, closing out. I always like to give the mic, which you've obviously already had, but I'm going to really pass it to you for any final words or anything that you want to wrap the podcast episode up with.
No, I just wanted to say thank you for giving me the opportunity to come onto the podcast. Yeah, it's been a great conversation, and I really hope folks continue to look at carbon markets. And of course, if they have data, look us up and give us a call.
Yeah, it was my pleasure. And I really appreciate you carving out some time during your holiday in the mountains. So, and I will echo that. If any listeners aren't familiar with Allied Offsets, please go to their website or reach out to somebody at their team. They offer absolutely incredible data. As you've heard in this conversation, the numbers that Anton, you've been dropping are just, it's a wealth of knowledge. So I hope all the listeners, both new and reoccurring, head over to chat with you guys. But thanks, Anton. Enjoy the rest of your week and your paternity leave.
Thanks, Jay.
All right. Talk soon.
All right. That's the ep. Thank you, Anton, for coming on and for doing it from your holiday in the Pyrenees, no less. Very kind of you. This was easily one of my favorite episodes, maybe in the history of Untangling Climate Finance. And mainly because the data that Anton and his team sit on is just endlessly fascinating. When someone can literally tell you what's actually happening across the entire market and not just their little piece of it, you listen. And that's basically what I did today. I hope all of you enjoyed it as well. We covered a lot of ground. So if you want to go deeper on the numbers, Allied Offsets
puts out a steady stream of reports, tools, data, all well worth taking a look. Please visit their website at AlliedOffsets.com. Pretty easy. Link is also in the show notes. And if any of this connects to your own work in carbon markets, that is exactly the kind of thing that we help with at Gordian Strategies. So reach out to the GKS team and let's talk. Email is also in the show notes. So if you enjoyed this convo, please follow, rate, and share the show. It genuinely helps others find us. And for more on climate finance, carbon markets, and impact investing, don't miss our weekly audio brief, Sliced, which is also right here on this feed. So thanks for listening. I'll be back next month with another ep of Untangling Climate Finance. And as always, this podcast is brought to you by Gordian Strategies.